Hi, my name is Leanne and I'm one of the tutors at Accountancy Learning. And in this recording, we're going to be looking at the Level 4 Professional Diploma Synoptic Assessment, and in particular, the pre-release material for the live assessment. Think of this pre-release material as setting the stage. It gives you real-world context for the actual accounting task you'll be asked to perform in the actual assessment. And in the real world, accounting isn't just about numbers, it's about understanding the business environment, which adds complexity to the textbooks. It's really important to study this beforehand. Synoptic assessments are all about connecting the dots between the different accounting areas. Getting to grips with the background will help you do that effectively. And in practice, accountants need to see how different areas of accounting fit together. For example, how management accounting decisions like pricing affect financial accounting results like profitability. Don't worry about memorizing everything. You can bring this document into the exam, but you will be able to see it on your screen during the assessment. Accountants use their knowledge to find and apply information as needed, relying on resources like accounting standards and software tools. So now let's go down to the background. Adient Electric Motors, or AEM Limited, sell both new and used electric cars. It's a fairly young business, only 3 years old, and it is run by 4 directors who founded it. The EV market is growing rapidly, but it's always very competitive. And owner-managed businesses like this have their own set of opportunities and challenges, such as balancing growth with access to finance. The directors have a strong background in the car industry, having worked for a major retailer. They started AAM to capitalise on the growing electric market, driven by both consumer demands for greener options and government policies that are pushing for the end of the petrol and diesel car sales. Government regulations play a huge role in the car industry, especially with the shift to EV policies such as subsidies and emission regulations, which can significantly impact the market. AEM sells cars through 15 showrooms across the UK, offering test drives and also online. For used cars, they provide a 2-year warranty and a breakdown cover. They also offer servicing plans and price match promise for online sales of new cars. And the car dealerships often use a mix of physical showrooms and online sales to reach more customers, and after-sales service like warranties and service plans as key part of their business for customer retention and profitability. AEM has experienced rapid growth in its first 3 years. They now have a turnover of over £40 million and employ more than 250 people. Fast growth can bring challenges, so it's important to have a good financial and people management in place to handle the strain on resources. Now looking at the company philosophy, environmentally friendly practices are central to AEM's limited philosophy. Their marketing emphasises on benefits of EV, and they aim to minimise their environmental impact in the operations and supply chain. They also focus on providing value for money in a competitive market. Sustainability is a big trend in the business today, with consumers increasingly concerned about environmental issues, so it's important for the companies to differentiate themselves. AEM Limited's head office, including management, finance and central services, is in Wembley. They also have a warehouse for online sales distribution. To stay competitive with their pricing, they focus on keeping operational costs down and managing inventories effectively. Showroom managers have targets for used car turnovers and limits on amount of vehicle parts they can hold. Efficient logistics and inventory control are essential for car dealerships, especially with online sales due to the high value of the goods and the risk of them becoming obsolete. Looking at marketing development, the electric vehicle market has grown significantly since AEM Limited was founded, which has also increased competition. However, AEM Limited is a strong brand and they are still growing. To expand further, they recently acquired Weldon Vehicles Limited, which has a good reputation and showrooms in the north of England, even though they don't specialise in EVs. The car industry is very dynamic with rapid market growth, often attracting new competitors and leading to mergers and acquisitions as companies fight for market share. The next area we're going to look at is AEM Limited's performance appraisal. Initially, AEM Limited focused mainly on financial results to measure the performance, but as they became more established, they decided to use a balanced scorecard, which looks at the broader set of measures. The balanced scorecard is a popular tool that helps businesses track their progress in different areas, not just financial, but it gives a more well-rounded view. Now, the first perspective that the business looked at was how customers view the business. AEM Limited's management believe that the customer's perception is crucial. They look at two aspects: how happy customers are when buying a car, and how satisfied they are with the service and support they receive afterwards. While customers are happy with the purchase experience, they're not happy with the aftercare service. And in the car business, building strong customer relationships and providing excellent after-sales service is essential for repeat business and a positive word of mouth. The second perspective is about the employee development, and AEM Limited aims to provide employee development through training and a supportive learning culture. The car sales industry often struggles with staff engagement and loyalty, so AEM Limited has introduced induction courses, mentoring, training programs, and a suggestion scheme. While these look like good incentives, feedback suggests that the company culture doesn't always promote and encourage the use. Looking after employees by investing in their development and creating a positive working environment is really important, especially in car sales where staff turnover can be high, which is costly for a business. Moving on to perspective 3, internal efficiencies, AEM Limited recognises the importance of efficient internal processes, especially for vehicle deliveries, after-sales service, and supplier relationships. They see this as key to achieving their growth target, and performance in this area has been strong. Efficient processes and strong supplier relationships are vital for any car dealership to control costs, ensure timely delivery, and maximise customer satisfaction. Now, on to the final perspective, which is about financial performance. While AEM Limited has a strong start, maintaining a solid financial foundation which is essential for the long-term sustainability, especially during periods of growth. They achieved good financial growth, but the acquisition of WV Limited has raised concerns about potential overtrading, which is when a business expands too quickly without enough working capital, which could potentially lead to cash flow problems. Now, below we've got some of AEM's key personnel. So here's a list, and it will, have a quick review of the staff that are involved, because it's going to help you understand who's in charge of what within the company, which is important to understand their roles in the decision making and operations of the business. So take time to familiarise yourself with the staff. Now, lastly, we're going to be moving on to the financial statements of the organisation. Firstly, looking at the P&L account. First up, we have the revenue of over £40 million. The company's been operating for 3 years and has expanded to 15 showrooms across the UK, plus with online sales, which contribute to the significant sales revenue. We've also seen an increased customer demand for the electric vehicles, supported by government legislation phasing out petrol and the diesel cars, which has also driven sales. AEM Limited's focus on the environmental benefits of electric vehicles and effective market campaign have also attracted customers. Now, with the cost of sales of being just short of £29 million, this figure will represent the direct cost for acquiring new and used electric cars, including purchasing costs and any cost to make the used cars saleable, for example, refurbishment. The company's ability to manage these costs effectively impacts on its gross profit margin. So this is the difference between the revenue and the cost of sale, given the gross profit margin as just over £11 million. A healthy gross profit margin suggests that AEM Limited can effectively price its vehicles and manage the direct costs associated with the sales. If we then move on to the operating expenses of just over £9 million, these expenses cover the cost of running the business, including salaries, marketing, showroom cost, administration expenses, and other overheads. And the company focuses on minimising its environmental impact, which may lead to higher operating expenses, for example, investing in energy efficient showrooms. The profit from operations figure of £2.38 million reflects the company's profitability from its core business operations after deducting operating expenses. We've then got the finance cost, which is £0.4 million, and these costs likely represent the interest payments on the company bank loan. So the level of finance cost is influenced by the size of the loan and the interest rate. Profit before tax of £1.8 million. So this is the company's profit before we look at any income taxes, which for this, the period for the income tax expense is £0.36 million, leaving the profit for the period being £1.525 million, and this is the company's bottom line profit after all the expenses and tax has been paid. Now moving on to the balance sheet. The non-current assets, the PPE of £2.17 million. This represents the company's investment in physical assets such as the showrooms, warehouse facilities and equipment. The current assets is made up of inventory, trade receivables and cash equivalent. The inventory value of £4.8 million is a significant investment in the inventory, reflects the value of the new and used vehicles held for resale. Effective inventory management is crucial in the car retail business to ensure vehicles are available for sale while minimising holding costs. The trade receivables of £0.95 million represents the amount of money owed to the company by customers for vehicles sold on credit, and the cash equivalent of £0.945 million. This is the company's liquid assets. Now moving down to the equity, we've got the ordinary share capital of 0.4, which represents the capital invested by the owners of the shareholders, which is the 4 directors. Then we've got retained earnings of £2.035 million, and this is the accumulative profit that the company has reinvested in the business rather than distributing it for dividends. The non-current liabilities bank loan of £3.2 million. It's the long-term debt which is used to finance the company's assets and expansion. We've then got the trade the current liabilities then, which is the trade payables and the tax liability. So the trade payables of 2.955 million, this is the amount of money the company owes to suppliers for goods and services, leaving the tax liability of 0.36, which is what they owe to the tax authority. So the figures reflect AEM's financial position and performance, and it's influenced by factors such as the company's business model, market conditions, operational efficiencies, and strategic decisions. Now, it'd be a good idea, as mentioned in the beginning, to familiarise yourself with this pre-seen material. Having a good understanding and knowledge of this throughout will make it easy when giving your answers.